Let's pick up on the markets now. The JSE facing mixed but generally positive global market sentiment, with investors digesting the hawkish U.S. Federal Reserve minutes and a recent easing of commodity prices. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, joining us now to take us through how the JSE is performing in early trade. Dr. Masilela, thank you very much for your time. Let's start with the Rand, which is trading firmly at around the 16 Rand 75 against the dollar. Is there a sign of a reprieve here?
Not in the short term, because people are worried about the recession, and the minute they get worried about the global economy slowing down, then they look for some safety, and the US dollar happens to be one of the safe havens. Hence, you see a demand when it comes to US dollars, then they're selling the rand, and the likes of the US dollar, the Swiss franc, continue to benefit out of that. And also, to make things worse, we are also worried about lower commodity prices. Remember, the rand itself is a commodity currency, let alone the impact on our economy when it comes to load shedding. So for now, I think we should be living with the fact that the rand will continue to weaken.
Yeah, let's stick with the commodities for a moment. They've lost some 20% since June's peak. What's influencing trade there, you think?
I think it has just been bad, just starting with the industrial metals, where lots of copper, aluminum, zinc, steel, you name it. I mean, in a space of 3 months, it has been a boom and a bust kind of a situation. Why? People are worried about recession. Those are the things that get to be used when the economies have to grow. So if people are worried that the economies won't be growing, then there won't be demand. Hence, prices will go down. You look at the likes of oil. At some point, it was going up because people were saying that there will be issues when it comes to supply because of the Russian-Ukraine war. But now when you start factoring in the possibility of demand outlook getting to darken because of the recession, showing you that there won't be any demand, that affected oil prices. And also you look at the likes of OPEC not even being prepared to move more aggressively when it comes to the supply side of things. You look at gold itself, we know that it has been weighed by a stronger US dollar. But we need to know only that the gold itself is more sensitive to interest rates, especially U.S. interest rates. So in an environment where interest rates are going up, then there's a huge opportunity cost for holding gold, because gold itself doesn't pay you any interest. So hence we see gold going down because we expect interest rates to be increased aggressively. So that has been the story when it comes to our commodities. But the long and short is that they're all priced in the US dollars. So if the US dollar continues to strengthen, then it becomes more expensive for holders of other currencies to be able to afford them.
Let's talk about the bond yields, which have reached 10.8% for the first time since the former president, Jacob Zuma, fired Nhlanhla. I mean, that's a long time ago, 2015, if my memory serves. Talk us through those developments and whether or not they are an indication that South Africans are avid bond investors.
We're in trouble. Maybe we need to understand that bond yields and bond prices, they move in an invest relationship. When the yields go up, the price go down. So the minute people start expecting that interest rates will go up, then the yields go up. As a result, people will start selling their bonds and the bond prices will drop. And what it does, it means it becomes more expensive for the government to go out there and borrow money, because they have to buy high interest rate. For corporates, which also tend to follow government bonds, it becomes very expensive for corporates to go into the debt market, because then the capital cost becomes very expensive, and the minute that happens, then it starts eating into your profits. So it's not a good sign at all. But the reason it's happening now is also because people are rushing to the safety of your gold, the safety of your US Treasury yields, because they're more concerned about recession. The only consoling thing here is, should recession happen, recession in its nature tends to be very brief.
Yeah, let's conclude the conversation, Mr. Masilela, with Trellidor. This is company news now, and that company is warning investors to prepare for a big slump in the results of its 2022 financial year, which could see headline earnings cut by more than half. What does this tell us? I'll tell you why I'm going to pontificate a little bit here in Makwe Masilela. One, you would think that South Africans at a time like this, they should be ramping up on issues of security, because with more load shedding, it means that we are plunged into darkness for huge amounts of time, particularly at night. We've just had a person in Mpumalanga saying that Amapara, these are your criminals, basically. They get into people's houses unannounced, and they are unable to even see who is in their home because it's at night. But here's a company that I should think conducts business through providing security gates. Or am I too simplistic in my view?
I think you're on point, Tolly, and the guys continue to do well, hence liquidity is okay. The problem with them here is that they lost the labor court case where they were told to reinstate 42 workers and also offer them some limited payback. And that was for the dispute because the night shift guys joined the day shift guys on unprotected strike. And the cost of that, though they've lost an appeal as a company to the Constitutional Court, but should they lose that, the total cost will amount to almost 32.1 million. So the guys had to make provision for that, and hence they're also not paying us an interim dividend. And the guys have managed to raise some bank facility to be able to cover that. But other than that, you are right, the company which operates in more than 20 countries continue to make more than 80% of their revenue per year. It's well suited, especially at times like that, where security happens to be one of the most expensive things for most people.
Explained it very well. Thank you very much, sir, for that markets update. Makwe Masilela, Chief Investment Officer and Founder at Makwe Fund Managers.